So either way, we would have been otherwise been waiting.
Welcome back, ladies and gentlemen. Now we move on to our next panel discussion, an exclusive CEO panel session on the topic, how can technology help addressing the negative fallout in COVID-19 on NBFCs? And some of the key pointers that will be discussed in this session will be on how has COVID-19 impacted your business? What technologies have helped with growing your loan book, servicing and exiting loans, repayments, and etc. and many more. So to discuss on this exclusive session, I would like to introduce in the order of sequence, Mr. Mahesh Tata, CEO from Edelweiss Retail Finance, Mr. Sudeep Bandyopadhyay, Group Chairman from IndiTrade Capital, Mr. Mahesh Thakkar, Director General for FIDC, Mr. Mukesh Malik, COO for Aditya Birla Capital, Mr. Arun Nair, CEO for Neo Growth, Ms. Bama Balakrishnan, COO for Northern Arc Capital. Now I would like to introduce the panel moderator, Mr. Shrikant Nadamuni, who is the chairman for NovoPay Banking and HDFC Bank board member. Mr. Nadamuni, since you being the moderator of this session, kindly take it ahead.
All right, thanks Devanshi. Wonderful to be here. We have a very illustrious group of people who are going to tell us a lot about NBFCs and the impact technology can have given the constraints that we're faced with in today's world. As we all know, COVID has had a fairly large impact on the financial sector. The GDP of the country has shrinked like most countries around the world. We have constraints on movements. Just yesterday, Boris Johnson announced a second lockdown of UK, major impact of UK, and we have seen our own impacts because of constraints because of COVID. There's also been the moratorium that the NBFCs have had to deal with. And, so we'd like to understand all of this and try to focus more onto what is the technology impact. There has been a business impact for sure. There's an issue on credit, on moratorium and so on. I'm intimately aware of this. In fact, I'm sitting on the board of the HDFC Bank. I, in fact, chair the credit committee, so intimately aware of the credit issues around it. But we will also, we will actually primarily want to focus on the technology that the NBFCs have adopted, how have they been agile in handling this COVID situation. With that, let's move on. So I don't want to go into the impact of COVID itself. I think we all know largely what the impact has been. So let's jump right into the technologies that have helped to deal with the impact of COVID with respect to growing your loan book under these constraints, as well as servicing the existing loans. I'd like to start with Mukesh. Can you run a fairly large loan book? Can you tell us a little bit about the impact of COVID and the technologies that have helped you grow your loan book and deal with existing loans?
Sure. Thanks, Shrikant, and good afternoon to everyone. So there has been a challenging phase. Distributor journeys, which could help us have highly digitalized process for onboarding customers and servicing. So fortunately, just few months before COVID happened, we were able to go live with that offering for a few products of ours, more in the personal loan SME segment. And this was a journey where we could do KYC using Aadhaar. RBI allowed video KYC recently. We had also put in facial ID, facial recognition technology. Our underwriters could actually speak to the customer on video, identify the customer, speak about the credit, and also technology which is intelligent OCR. So you read all documents customer submits to you through the agent, then you read and correlate all of them with one another and make logical sense out of it and put up a very cohesive picture in front of the underwriter. So we had put these things in place for some other products. We just had to speed up some of these, smoothing out this to various customer segments and products. I've been glad to report that as of September 30th, we came back near normal. Our earlier volumes with 80 to 85% of onboarding happening digitally. in the last quarter. So overall, I think it's not only one technology, series of technologies were helping us in this period. Coming to collections, which like you spoke about moratorium a bit, and that became a critical, very critical engagement point with the customer to keep our collections buckets going. There also we had worked on voice bots just before lockdown started, and they were really helpful. And voice bots work very, very smartly on cloud telephony kind of platform. They work seamlessly with very, very low cost. So that was another huge advantage we had. Going forward, also, I see some of these technologies playing a role. In addition to having focus for all of us to bring all services that customers can avail of, onboarding is one part, but you need to service the customers also throughout. All the services also on digital platforms. That is a key focus. There we have some gaps which we are working on.
Awesome. I would like to ask the same of Mahesh. And by the way, guys, we have about 40 minutes and we have about 8 of us. So let's try and keep it to like a 2-minute crisp response so that we can get at least 2 questions with each of you. Mehernosh, you're on Edelweiss. Again, is your book growing right now? And how have you been servicing your existing loans? What has helped you from a technology viewpoint in growing as well as maintaining your business?
So I think as the lockdown started, one of the most important things for NBFCs was to see how we can manage our portfolio, right? To put everything in perspective, new business was pretty much put on the back burner because anyways, you could not move out, talk to customers and do anything new. And among the first things we did from a technology point of view was to make it easy for customers who had missed paying their EMIs to come online and quickly make their payments. So we got an easy tab option on our portal where clients could come in and very quickly make the payment, and it was a secure way to make that payment. We also opened up multiple channels, whether it is wallets or debit cards through which they could come and pay. Earlier, it used to be a requirement where somebody would need to go to a branch and make a check payment, etc. We said all of that is not needed. You could pay it through any of the modems that you have that are legally allowed. So I think clearly ease, not just the intent of the customer, but also I would say giving a facility to the customer to make the payment was something we did on the technology side, on a portfolio management. From a business point of view, I think we did a few things. Recently, we launched a portal where we were able to allow our channel partners to have a contactless login. We are a company where a lot of our business comes intermediated to us through our channel partners, and hence it was important for us to give them this portal where you can do a contactless login. We've also sort of centralized some of our data entry processes using technology, which is actually helping us today to decision the transactions faster for new clients that are coming in. So these are 2 or 3 things that we are doing. Agreeing to what Mukesh also said, there is some work happening on the servicing side for the set of clients that we are on board.
Awesome. Moving on, the loan origination process is absolutely important, and when you have to be extremely agile and dynamic in order to deal with the realities on the ground. So I was curious on the associated technologies, the process changes that were needed to accommodate the COVID situation, the pandemic and its restrictions. I want to ask Ravi on the housing finance side, on Shriram Housing Finance. What kind of things, what kind of changes did you have to do? Or were there any things that you did, particularly with respect to technology, to handle the origination process? Ravi, can you hear me? Or can you unmute yourself? Okay. Well, I can't hear him. Let's move on to Arun. Arun on new growth. I know you guys are a very agile operation. What are there things that you guys did on the origination side that helped you during this COVID time?
Actually, thanks, Shrikant. See the point which Mehernosh made around new origination. That's kind of taken a back seat a bit during this crisis. But however, our focus has been more around customer engagement. One is how as a company you engage with your employees. Second is how do you engage with the customer. But there's a third very important element, that how does your employee engage with the customers when everyone is working remotely. So through our microservices and agile development methodology, what we could do is in a couple of sprints we could build a collection app for our front-end team. And those apps work beautifully, are well integrated with our loan management system. So when a person goes and meets a client, whether he needs a restructuring solution, what is happening on that client, the app will tell the salesperson or a front-end person what is the outstanding, what kind of restructuring can be done, what's happening on the credit bureau, what is the best solution for the client. So, you have a capacity in the company which is engaging with customers. Some of them are collection folks, some of them are sales and product management people. They don't understand collections. So you have to, the best way to train them is put a structure around kind of questions to be asked and the best solution for the customers. So far, we've been able to convert close to 4,500 customers, around 25% of our client base, under the restructuring or forbearance program, primarily through this app-based offering. So it's worked very well for us. Second element of technologies, I would rather integrate that with data, is about segmentation of your clients. You have a portfolio, you have a situation. You can't reach every client because every client is not the same. So how do you segment your population? Which is a high risk, which is a low risk? What kind of machine learning algorithms you can implement? That has helped us a lot. So we know which segment to focus on, which will get auto cure, which will get will need some kind of a support. So technology and data put together really has helped us immensely in this kind of situation. Our cash collection is less than 1% of whatever we collected over the last 6 months.
Wow. Okay, wonderful. Well, thanks, Arun. So moving on, there's been a lot of exciting developments. Nandan Nilekani a few weeks ago talked about OCAN. I don't know if it is OCAN or Ocean, whatever it is. It sounds exciting. It comes from the iSpirit team. And the whole India stack and the digital India on the financial sector side started with Aadhaar, and then several things came, e-sign and e-Nash and UPI and so on, which have been a huge jump for us on the financial sector. And the likes of Bill Gates have said that India has moved much more rapidly than many other economies. So with respect to OCAN, I'd like to ask, perhaps Bama, you can jump in. And this flow-based lending that Nandan is talking about, how you can use dynamic data, the GST and data, you can maybe do invoice discounting, you can probably lend to MSMEs and so on. This idea of dynamic data being, the digital exhaust of the customer, be it transaction data that you already have of your own customer or new to bank customers and so on. What is your experience in this kind of flow-based lending and OCAN? Do you think you can launch products here? What are your plans at Northern Arc, Bama?
Thanks, Srikanth. This is a very interesting question for us. Of course, we are a slightly unique company in the NBFC space. We sort of sit between about 150 plus NBFCs in the country and about 140 investors, enabling access to debt capital for them. Our partners basically serve close to about 40 million underserved customers. So these are broadly microfinance borrowers, SME borrowers, customers who avail of used vehicle financing and consumer finance to sort of new to credit customers and so on. I think what we've seen, at our end, before I kind of dive into the response to your question, even at our own end, technology has actually helped us continue to interface with these partners. So through our proprietary platform, we've enabled access to close to about almost $500 million of debt for these NBFCs over the last 6 months. And that's been entirely almost on a contactless basis. So we have about 90 NBFCs who already sign up on our platform and kind of work with us digitally. And that's honestly been quite a bit of discovery for us. Because as you would imagine, institutional markets, particularly the debt capital markets, have largely been high touch in terms of the approach. So while there is still a lot of intervention in terms of closing conversations and transactions, to our minds, what the last 6 months has proven is that a lot of conversion closure can actually happen digitally, and it's actually a preferred solution for many of our customers. On the specific question on flow-based lending, very interestingly, we've been working in the space of lending through a tech platform for the last about 5 years now. We have a co-lending platform through which we interface with about 20 partners. We've disbursed close to about 700 crores of funding through that platform to both SMEs and individuals. And it works pretty smoothly. I think what we've seen is that the operating cost is significantly lower. In some sense, we're able to leverage the access to data that the partners themselves have. So a lot of them are fintechs, and I think the fintechs, honestly, in the last 6 months have been very well positioned to sort of ride the disruptions of COVID. My take on OKEN, and I believe it is OKEN, my take on that is that it's envisaged as a protocol for lending, similar to how UPI is kind of designed as a protocol for payments, right? And given that we've seen the infrastructure working very well for someone like a Neo Growth, in fact, the large NBFCs, including someone like Aditya Birla and others, are very active working on this model already. I think OKEN in particular aims to convert a large number of aggregators. So it could be, a Kirana tech player, it could be a food delivery app, or anybody else into a loan service provider. And I think that's the thought, to say you provide a standardized stack that they can just integrate with whatever application the customer is engaging with them on and enable access to credit. I think it's an interesting disruption. However, a couple of observations there. One, I think digital lenders would prefer to operate in an ecosystem which gives them visibility beyond what a single LSP can provide. So they would still look for multiple sources of information, but they could easily leverage this network to access multiple LSPs. I think the second critical point is that a digital lender or a fintech today wants to own the customer and wants a 360-degree view of the customer to generate value. So they don't want to be just a provider of a single credit product. They don't want to be many steps removed from the customer. And this could be some of the considerations, but I think it's a great idea to enable access to perhaps small ticket loans, which can really democratize the access to credit. So I think it's an interesting disruption.
Absolutely. You referenced Aditya Birla. Before we move on, I want to bring in Mukesh. Again, Mukesh, if you can quickly tell us what is your experience of this OKEN and flow-based lending at Aditya Birla before we move on to others.
So I may not have full information about that, but yeah, we do supply chain finance. And I don't think we are doing lending basis the GST and flow, etc., studying online basis. So I don't think, I may not have enough information on that. But supply chain finance, we are a strong player in.
I see.
Okay. If I can add a bit on the OKEN piece, if you permit.
Sure, go ahead.
Yeah. So essentially, OKEN, in my mind, is going to have the same impact what CIBIL had on the consumer lending, right? It is very, very powerful. And flow-based lending has been, a lot of Nbfc have been engaged in some way or the other. We do flow-based lending based on digital transaction track record. What OKEN is doing is OKEN is bringing in a very powerful structure of multiple stakeholders on a single platform, and the customer experience is going to be, very, very different there. So I think, in my view, it's a game changer, provided it works the way it is designed.
You're saying the ecosystem where there is a LSP, there are multiple lenders, there is sort of this almost an auction system where you're able to choose the best lender dynamically with account aggregator, data flowing in. All of that will really give us the kind of numbers that we are looking at. No, I certainly am looking forward to OKEN being the lending equivalent of like UPI on the payment side. It has the potential. But I think all of us need to pilot it, test it out, and so on. So moving forward, there are many other exciting areas I want to discuss with you. See, one is many of you have a large field force, okay? And today, if not running blind, we are a little hobbled because we are not able to meet with our field force. The hierarchy is not able to sit down and discuss what's happening yesterday, what happened last week, how come we have a shortfall here, and so on. Earlier, we used to be able to do all those things. So there have been some tools that people have built. Salesforce has built tools, Microsoft has built tools, Oracle has built some tools. In fact, one of our companies, NoPay, has also built some tools on the field force automation. And I was very curious because we are going into some of the product depths. What is your experience? Have you launched, I'll ask, Sudeep on IndiTrade, have you looked at field force automation on your side in order to get some productivity improvements when we are sort of running blind in a COVID situation?
Absolutely right. I think what you say is very, very correct. Fortunately for us, we launched our microfinance business, which has a very, very large field force. We have about 1,200 people on ground covering about 200 plus branches. And that's the kind of field force where this kind of automation is critical. We launched along with the automation because we realized that if you have to expand in a meaningful and cost-effective manner, without proper automation, it's absolutely unviable. So we have been lucky, we launched with that. But I'll tell you here what the lacunae of the system is even today. While we have this fantastic system whereby we do pretty much everything digitally for our microfinance business, from the starting till the kind of disbursement, along with the geotagging of customers, pretty much all kind of technology what is available today is used. But there is still a gap. The gap is the collection. In microfinance, the collection of the installments from the borrowers still happens in a physical mode. And when this COVID struck the world and as well as pretty much all of us, we realized the problem there, because in our other businesses, whether it's an MSME or a digital lending, the repayments kept on coming. People, okay, there were issues, there were challenges, but people by and large were paying. 60-70% of the portfolio, the repayments were coming on time. People were pursuing our borrowers for repayments and it was coming. But microfinance, it was just not possible because it was a lockdown scenario. Nobody can go out. So that's the place where we are now looking at automation. But yeah, there's still a long way to go.
Absolutely. Our own experience, of course, we run a slightly different, basic corporate basic business and some lending, but there are some specific tools I found very important for productivity monitoring of every last person based on GPS location as well as events that they are putting on their app, so that you can actually figure out what correlates to your progress. Absolutely important. Attendance management. Are you even working today? If you say you're working today, did you move around today or did you sit at home and said, I'm working today? Number 3, incentive management. If you actually did well, I will pay you right now on the incentives. You don't need to meet your manager. You don't need discretionary powers and so on. So I'm seeing a lot of really good, traction here. Mahesh, since you are Director General of a body that is looking at NBFCs, the FIDC, and I can see your logo and title behind you. What is your feel about, since the NBFCs do employ a large number of people, and to keep the productivity levels of these people high during a COVID situation is truly important. So is the field force automation product useful? Have you seen NBFCs adopt it? What do you think?
Yes, thanks, Shrikant. See, I, as an association of the body representing all the NBFCs, our job is to see that members use this technology. There is no point in now enumerating the advantages of technology and fintech. Everybody knows about it. Okay, members use it to the maximum. The best tools are available. And second, more important thing is that if there are any regulatory bottlenecks are there in allowing this or sharing this or coming on the common platform or the privacy rules, how to overcome that, to represent to the authorities on that. Say, for example, the people talked about eKYC, there is a central CKYC with that tool should be available to all the institutions, banks, NBFCs, mutual funds, insurance companies. Once a KYC is done, it should be applicable to all. That's been there. On GST, as we said, the maximum data should be shared, GST data and bank analysis, that will save a lot of issues. So how to get that done is my job, because that will allow, advantages of technology, everybody knows. And on the field force, yes, maximum tools are available to see that members benefit by it. This is the new normal, which is going to be permanent hereafter. When we compare the physical, activities plus this digital is far ahead of it, and day-to-day new inventions will keep on coming. And we have succeeded, with World Bank Group, we have done on flow-based lending and how to do it, how to popularize rather than collateral-based lending. And many members have been taught that. And after that, MSMEs have been benefited because of that. Second thing is, to the regulators, we had done 3 seminars only on technology, on which we have explained what is the way in which we can do the common sharing. You know, banks might have different perceptions, but slowly it's coming out. And with the co-lending and all coming in, perhaps we will be able to work together.
Mahesh, you mentioned, Aadhaar and KYC.
Yes.
And Aadhaar is close to my heart, up close and personal. I was the founding CTO of Aadhaar and created the technology center in Bangalore to implement it. So let me ask you a question because I'm curious. Over 50 billion authentications have been done by Aadhaar, okay? And, the usage has been going through the roof. Of course, we had the Supreme Court, put some restraints on Aadhaar as well. Since you are sort of representing the NBFC body, are you able to use Aadhaar appropriately to do KYC of your customers? Do you still face constraints? Do you face constraints using Aadhaar for KYC or authentication?
Yeah.
Or are you able to use Aadhaar properly? Because we know the usefulness of Aadhaar, but are you able to use it?
It was not allowed. We were jolly well using it in the beginning. And then came the Supreme Court judgment not allowing it. Then we went on representing, but the RBI and the government of India were also scared of allowing all access of Aadhaar to NBFCs. And till date, it's not been done. But we have this eKYC through which it is getting done. Partial solution has been done. For if you ask for 1 or 2 years, we had a problem after Supreme Court judgment. Yes, it was a problem of a big order. And we have been able to manage. That's why I said we all need to come together and understand that each instrument, each lending institution, banks or the NBFCs, we have 20% of gross capital formation in the country. You can't undermine that NBFCs can't use this, only banks can use it. So we have been lobbying and succeeded. The co-lending, which was announced 2 days back, that also is one of the reasons. 2 things I always say even to the RBI governor, I said, just empower and enable NBFCs, and we know how to enrich the economy and the MSMEs. We know about it, okay?
Sounds good. Now, let's move on to some newer innovations, newer technologies. In my mind, artificial intelligence is probably one of the most important transformations that are coming about in the technology space, maybe as important as the smartphone impact on the country and the financial services sector. So let's talk a little bit about AI. Maybe, Mahesh, on your Edelweiss, on your portfolio, are you looking at new products using either unstructured data, OCAN like flow-based lending, AI-based credit rating? Are these on top of your mind? Do you have teams that are looking at these things? And what are your plans on the AI side of things?
Yeah, I think AI and ML both have to play a big role now in the way you look at things. More and more as we see it, data is becoming important. It's getting democratized. And to that extent, that the fact that the data is getting democratized gives you the ability to, with customer consent in the right privacy laws, get the data, use it, slice it, dice it, and offer the right set of products to your set of customers. So, we've also migrated onto a cloud platform. I think it's scalable, far more easy to use these technologies, and you have the ability to use AI and train data sets to be able to give you the output that you desire. So we are working fairly closely from a risk analytics point of view right now, Shrikant, where we have information in excess of 30,000 of our clients. And that data clearly through AI is helping us put out and cohort customers in low, medium, high risk zones. At the same time, we are using propensity models through AI to also target the set of customers who would be most interested in looking at a fresh set of loans. These are 2 verticals where we are currently using AI.
Anybody else who want to chime in on the AI aspect of things? Anybody using it right now for their loan portfolios?
In fact, Shrikant, what we have been doing is we also have a digital lending business, and it is extremely critical in digital lending where everything happens online. The customer is applying through the app, and we are supposed to be, sanctioning the loan within 2 to 3 minutes. Everything happens on the machine. And it's extremely important that the learning is very, very fast. And that cannot happen in a physical mode. It has to be machine learning. And the intelligence plays a very, very important role. Which segments to focus on, which segments to avoid, what quantum of loan should be given based on what the learnings are. I think it plays a humongous role. And I think if you have to scale up lending, at least in the retail space, unsecured in particular, the machine learning plays a massive role. The more we are able to harness it, the better it is for effectively giving loans and also bringing the cost of lending down.
Okay, wonderful. So let me, we have another few more minutes. I wanted to ask you a more general question, which is, we have a way of building technology for banking and financial institutions. Are you happy with the products and technologies that are available today? Or if not, what is missing? Who wants to take this?
I can answer that, Shrikant, if you're okay.
Mukesh, yeah, absolutely. Go ahead.
Sure. So when pandemic, the whole problem started, while I said that some of us were already ready with customer onboarding technologies and focusing more on bringing digitalization to the service elements also, we could do much more in our mid and back offices automation. All of us have hundreds of people in that space also. So focusing heavily on robotics, and we have several robots working already. Also, another open space has been how do you do the pre-sales without meeting a customer? So how do you explain the brochures, calculate various things, identify customer remotely? So I think most of us are working on a co-browsing screen share kind of technology platform where you can interact with the customer in one go, explain everything, then also do screen share to fill the form. That entire piece, I think, is mostly missing in the industry. So I think most of us are working on that space also. I referred earlier to voice technology. I think that is the next big thing. And in the last 1 year or so, we have seen uptake amongst the customers on the WhatsApp and chatbot platform. That is ramping up very rapidly. Customers are engaging even on term loans where customers engage with companies only once in a while, only when there's some problem on repayment or partial repayment and so on. But now, because of WhatsApp and chatbots being freely available to customers 24/7, we are seeing engagement happening very, very often. And we are able to offer other products and services to customers on these platforms. So that's another one. The next big thing, like I spoke about, is the voice. I think voice will change the way customers interact with us. In another 2 years, I see about 50 to 60% of customers talking to us and not writing to us. So we are working on voice technologies right across spectrum of onboarding to service to collections and across the spectrum of services.
I see. Bama, this is sort of related to what you were saying. Since you provide financing to several NBFCs that are working for the underprivileged and so on, has the cost of finance gone up at this time with all this COVID situation?
Interestingly, Shrikant, the yields have actually literally crashed. So it's I would say it's a strange situation. Mostly, I think it's driven by the flood of liquidity into the market that's come in. But at the same time, I would say that there's a huge divide between perhaps entities which are rated at least A and above and the rest of the world. So for the rest of the world, the cost of credit perhaps has gone up a little bit. But more importantly, the availability of credit has squeezed significantly. So I think that's a real challenge that the small and mid-sized NBFCs still face. It hasn't pinched them yet because frankly, the credit offtake has not picked up very much, right? So a lot of people are really focused on collections recovery at this point, and nobody wants to go out on the front foot and lend without understanding the path to recovery. But I think that in terms of margins profitability, probably credit costs will be more relevant this year than cost of funding, definitely for well-governed, well-managed institutions. But we do see that significant divide that exists in the market. In fact, in the second part of Q2, we saw a chase to yields, in fact.
I see.
But I think Q3, I think so far has been, I would say, a bit of, status quo, nothing much really moving in the market. Till people get comfort on, collections recovery, I think the markets will be cautious.
It's a strange world. When the GDP crashes globally, the stock market's are hitting all-time highs, cash is sloshing around, and cost of finance comes down. But whatever, I'm guessing things will settle down. But now that we are on the topic and we have a couple more minutes, if someone wants to take, we're all dealing with moratorium. I'm not trying to put you on the spot here, but from a technology perspective, what helped you deal with the moratorium order and you being able to quickly deal with it and implement it? Anybody wants to take that? What tools helped you? What technologies helped you deal with, implement moratorium quickly so that it was smooth?
Actually, I think in my view, it was most of the NBFC's existing loan management systems were robust enough to handle this kind of disruption. I haven't seen anyone struggling to implement that from technology standpoint.
In fact, Srikanth, I'd like to add that it's absolutely correct. Most of the NBFCs, at least the reasonably well-managed ones, had a technology system which was able to kind of quickly adopt to the relevant declarations of the regulator and take necessary steps.
It's Srikanth, it was the restructuring of a transaction, which in any case we keep on doing because we are all very flexible in our recoveries.
I see. Wonderful. Well, you know what? Thank you, everybody. I mean, Devanshi gave us strict orders to stay with 40 minutes, so I'm trying to keep it at 40 minutes. Thank you so much, all of you, for such an informative discussion. I know you guys all have very, very busy jobs, and you've taken the time to be with us today. And it was very interesting talking to you about the impact of technology on the NBFCs under these, really challenging pandemic situation we have. So with that, thank you, everybody, and thank you, the audience as well. Over to you, Devanshi.
Thank you so much, Mr. Nadamuni, for wonderfully moderating this session. And thank you all the panel members for your valuable insights.
Thank you, everyone.
Thank you.
All the best.
Bye.